So this is something you might want to kind of just talk to your tax person about, because it gets a little bit.
Would that include facilities if you bought a property?
Actually, I'm not sure about this. No, I'm not sure about
Special rules for that.
Yeah, for 179 a bonus, I think it's more for like machinery, equipment, furniture, fixtures.
What about vehicles?
Yeah, there's certain limits on that though. Yeah, so
Do you know the general rules for that?
I know like if it's not, so if it, for example, if it's an SUV, I'm not sure about the 2018 ones, but for 2017, like if it's an SUV, then it's capped at 25,000 because basically the rule is like if it's a vehicle that's over 6,000 pounds, then it's classed differently, and then you could take the 179 on it. But if it's an SUV, then it's capped at 25 because everyone was buying those Hummers. And then if it's like a vehicle for cargo or things like that, then it would count. But then if it's under 6,000 pounds, then there's different rules for that. Yeah. Okay, and then just to mention this, it's not new, but there is an election that you can take. It's called the De Minimis Safe Harbor election, and normally you have to depreciate anything that's over $100 and will last more than a year. But with this election, you can expense immediately anything under $2,500. So that's a pretty good, yeah, you don't have to depreciate it, pretty much. So this one only applies to companies that make 25 million in gross or more, and it's about interest, business interest. Does anyone care to hear about that?
Oh, yeah.
So I'm just going to skip that.
Those guys are not in this room.
Everyone in this room would like to be in.
We already talked about the NOL deduction. And then I think this is, I'll save this for last because it will affect everybody. So now entertainment is no longer deductible. So before, meals and entertainment were 50% deductible. Now you don't get anything. So for example, if you take a client out to a baseball game, the tickets are no longer deductible.
But you can put it under networking, right?
Mm-hmm.
If they audit, they might remove that from there. So it kind of depends on your auditor too, honestly. But yeah, and then meals and entertainment with clients or colleagues, that's still 50%, so that's the same. Does anyone do like staff meals where they, like you will buy food for your employees and bring it in-house so they can stay longer for, so basically that category, it used to be 100% deductible, and now it's only 50%, and after 2025 it will be 0. So that's the.
So Google's gonna.
Yeah, Google is.
Have a problem.
Yeah.
Chef at
exactly.
Google's going to look for work.
Yeah.
Yeah.
So can you go
Yeah.
over when you can expense lunches again?
Do they
So
pay
if I buy
tax?
one of these colleagues lunch?
Yeah, then it's 50% deductible.
Like before,
Yeah,
Just like.
that's the same.
but I can't take them to a baseball game.
You can, you just can't deduct it.
You can, yeah, you can deduct the hot dog.
Yeah, you can deduct the beer and the hot dog.
That costs more.
Yeah.
So basically, as long as it's food,
Yeah, well, as long as it's food that you're not, yeah, right now, even if you bring it in for your employees or you buy it for a colleague, then yeah, it's 50%.
yeah, if you go out to lunch or
What happens
Any
if you
food
take your
or drink.
staff to an all-inclusive
Yes,
resort?
so team building, that's what we call that, and that's still 100%. And generally, a safe rule is like, you know, more than 80% of the team was there, and all the team was invited.
But not customers.
No customers, yeah,
What
yeah.
about lunch?
And it would.
What about lunch and learns? You know, lunch and learns where you set up for 15, 20, 30 people, and you give everybody a dinner and kind of wreck that lunch or whatever, and then you sell your product.
And, okay, so, and you're selling a product and it's like a little seminar or something?
Or service or product or
Yeah, then
service.
I would put that into marketing. Yeah,
Which
if
is
it's like
fine.
you're catering or you're like throwing,
Which is
yeah,
100%.
yeah.
What about a fee to pay to go to PATCA meeting?
Well, the fee, like, do
Subscription.
you guys have like a dues
yes,
thing?
annual
Okay.
dues.
Yeah,
Very
so
modest, very modest. You can join tonight.
yeah, so that would go into dues and subscriptions, yeah.
Well, what about if you're not a member and you come to the meeting?
I would, yeah, if you consider it like your networking, then you could put it in advertising.
Continuing education.
Education.
Or that, yeah. I mean, advertising would work, it's what's the purpose, usually like, so for example, if you go to a conference, are you there to market yourself or are you there to learn? So it could be, yeah, it depends on what your purpose is.
So why wouldn't baseball tickets fall under marketing if you're taking clients?
Because it's like a form of entertainment that is like kind of gray area, like people take advantage of it, so I think they like throw that into this. Yeah, so basically, I think the reason why they're removing that deduction altogether is too many people, like they don't want to audit it anymore, so they're just taking it off.
One thing you have to understand about tax is that she can't exactly tell you. There were only 100, in recent years, there were 145 people in all of the United States prosecuted for tax evasion. Willie Nelson, you know, people that are out tax deniers, this kind of thing. She gets flagged every time that somebody is over a limit. If she gets too many flags, she can lose her practice, her license. So whoever your tax person is, they have to be conservative to protect themselves. But if you can make a legitimate claim for it, if you get your newspaper to stay up on the business trends, it's deductible, you know. The question I've used, and I got audited for 5 years and they didn't take a dime, was if you can say, here's a business reason for it, deduct it. And she's going to be conservative, and if you're a little wild, you're going to end up balancing out. It's really how it works out. And if you come at it from that perspective, virtually almost all the people I've told about this have found they made a big savings in their taxes for themselves. Is that?
And you guarantee it, right?
What? They audited me for 5 years. I walked in, I handed them the box, and they called me up and said, here's your box, go away.
My view is if they're auditing people like me or you, they have too much time on their hands.
They do. Plus you got what is it, 0.5% of the, I think it's 0.5% of all returns are audited, just as a compliance.
And they also, I think, run it just through like some data programs that will spit out like, oh, generally
The
this,
flags.
yeah, like there's this range that people in this area pay rent for, and then if you're deducting like twice as much, then those are the things that'll flag them.
Yeah.
And if you take the home office deduction.
No, actually, I think they're
I know, it's
pretty
all
good
the
about.
same.
Done for years.
It's pretty
That's why I like
sophisticated too.
TurboTax.
They know
Gives
that
you a
like if
rating.
you
Oh,
make
it does.
100,000 a year and you're donating 30,000 to your church, they're gonna flag that, you
Right,
know.
yeah, so
But
usually
if you're
it's-
making
yeah.
10 million a year and you donate 30,000, you're not gonna get flagged. Or general contractors are noted for having grossly accelerated incomes when the economy recovers, sometimes twice and 2 and 3 times. And so they get their set of flags too. And it's amazing how detailed it is.
I'm curious, have you figured out what it was that flagged you for 5 years? Was there something specific?
They got me on 0.5%.
Oh, you just.
I just happened to be in the 0.5%.
Okay, so it wasn't a line item that you think.
And they said, hey, while we're at it, let's take 4 more years. And
Well, they did it all at once, so.
yeah,
Like it was just one audit.
I just walked in with a couple boxes, I don't remember now, 4 or 5 boxes of checks, and here's the checks, and they went right through the checks.
But it was a single audit. The way you said it may sound like.
Single audit over covering 5 years.
Wow.
Yeah. Yeah.
Yeah, well, usually if they find something in the first year, then they'll keep on going back.
Or if they think there's something that.
Yeah. or-
What happens if they find more deductions? Do they give you like?
They put you on the rack and look for even more deduction.
They write your check.
Actually, have you heard of where they gave them something?
I had one, I went to an audit representing a client. The IRS wanted to collect about $5,000 from my client, and I went in and represented him. I was really nice to the auditor, and he said, oh, there's this extra thing that you forgot. So then the client got an extra refund of like $300.
Well,
But it depends on the auditor,
Yeah, it's
obviously.
up to me, I know. Just be
It's
nice.
just, yeah.
Did you take him to a baseball game?
And they also tend to go high, because if you're on the defensive, then they got a better shot at you, so.
And then just the last thing I wanted to mention is California has not conformed to these. So California returns will probably look very different from federal this year. And so, for example, California will still let you take 50% of entertainment.
Oh.
It's just federal, yeah.
Because we're flush with cash.
Yeah, so we'll see if California ends up conforming, but,
So,
yeah.
question about the state. I heard rumors that they're gonna let us give donation to the state and consider that.
Oh,
Can you
yes,
talk
I
about
think
that?
I heard about that in a seminar, but actually I'm not too familiar, like
I think they're trying to see if it'll pass legal muster,
Or
so
property tax.
going
Yeah.
through.
I heard 80%, they had shifted it so it would be a true donation to the state versus.
80% of
Well, I also heard that they're gonna tax businesses to cover the amount that the feds are giving them, the approved, the lower corporate taxes. That they were gonna raise California state taxes
Oh.
to make up for the.
I haven't heard that.
I haven't heard that.
Well, I don't think they're gonna do it.
Yeah.
They're talking about it.
This is crazy, because you're already in 2018 and the tax laws.
They're trying to cover their state loss.
And they would have left them.
Yeah,
No,
they-
it's just
Haven't filed yet.
Don't do it.
So what, there was that, a lot of conversation before they passed the tax law that your state tax will no longer be deducted from your federal tax.
It's
That's
up
what
to
we're talking
10,
about.
it's up to 10K
But
that you,
if I pay state tax of 15,000 for my business,
yeah, then, wait, no, for your business?
oh no, sorry, it's coming through.
personal.
Personal.
Yeah, if it's personal, then it's capped at 10K.
So I would then end up paying tax on 5,000.
No, you don't pay,
Just
I
can't
mean,
deduct it.
you paid 15,000 in tax, then you just get to take 10K as part of your itemized,
On
if
the
you
federal.
itemize.
Yeah, but
But
before I used
before
to
it
be able
was-
to do 15, so I'm paying.
Yeah, before, then
Then
you're
I get
losing.
20 off.
Yeah,
So the most you deduct
You
is
pay
10
the
or the
extra
least?
tax on the
the
5,000.
most, yeah.
Your
And it's
schedule A
income
is
plus
not-
property tax.
Right.
It's not just income tax.
Yeah.
So if it, I mean,
If you
I
live in
didn't pay it, but
California.
if you did pay it, you did pay it early for 2018.
Yes, then 2000, yeah, well, no, you couldn't pay any taxes for 2018, but if you paid 2017 taxes before the end of 2017, then on your 2017 return, there's no cap yet on the 10, there's no 10K cap yet, so you could take it.
Starts this year.
What about property taxes when you have, multiple
That's the same.
properties?
What about, like,
As a sole proprietor and you have multiple properties, your home plus whatever,
okay,
how's property taxes deductible? They're deductible on the property, I would assume, aren't
if it's just your residence, then
No,
that's
no.
just, it's a
Other.
Schedule E, or like a rental?
Yeah.
Yeah, then you can just take, the property taxes.
they? That's not touched.
No. Yeah.
On the Schedule C, what I keep my copy of
Yeah.
that. It looks like that didn't change too much, except for the entertainment. It sounds like the car expenses, you can still write off the gas and repairs, that stuff, and office expense.
Yes,
Looks
yeah,
like
that's all,
the same.
yeah, anything that I mentioned, those are the changes, so everything else is the same. Yeah,
Okay, so home business is pretty much the same.
yeah,
So I don't see a lot of change on that.
yeah. It's more that, yeah, the biggest thing was on Schedule C, you get the 20% deduction if you qualify,
Yeah,
yeah. And then again, yeah, meals or entertainment.
you still get the meals.
Yeah,
So
you
that
still get
hadn't
meals,
changed. So
yeah.
if that's mostly what you do, then that hasn't changed.
So just coming back to that, you can't deduct your state tax from your federal tax thing. In 2018, you're filing your 17 return, but you pay 3,000 of state tax in 18 and 10,000 in 17. Is it just the 3,000 that they would say is below the threshold, or do they go back and say you paid state tax of 13,000, therefore in your 17 return?
For 2017, if you had paid it in 2017, then that counts as a deduction. If you pay it in April of 2018, it won't hit your deductions anyway. Because it's paid after 12/31/17. It has to be paid in the year.
Depends on
But you
when
still
pay
get the
it.
10,000, you still get
Yeah, you still get whatever you paid in 2017. And then in 2000, yeah. So 2018 is when the 10,000 cap, for 2018 taxes, that's when that rule comes into play.
So it would be the 3,000 that you paid for 2017 in 2018, plus whatever tax was withheld or paid in 2018. That total would be capped at 10K.
No, only the 10, so it's only the money you paid in 2017 is what you would have gotten to deduct on your 2017 return. So whatever, if you had to pay an extra 3,000 in April 2018,
No, but you
that
pay
does not.
January 31st.
Of
That's your fourth installment.
I think you can't, right? Like it
Wait,
has-
so if you paid it in January 31st of 2018, that applies to 2018 taxes.
Yeah, it does not apply to 2017 taxes. It
No,
has
but
to be
you're paying,
Even though you're paying for 2017 taxes, it's based in the year that you paid.
the actual, that's why everyone was rushing to pay their
Yeah,
property tax
paying
by
in December.
12/31, yeah. That's what, you had to pay it in 2017, you actually paid it in 2017, not just accrued a liability to it.
still confused.
I mean, we can talk after too,
Yeah.
if you want.
If you get a refund for this tax year 2017 for state income taxes, and will that become income on your 1040 in 2018?
If you itemize.
Yeah, it's possible depending on how you labeled the deduction, because the 10,000 limit is for property tax and state income tax. So if say your property tax is already 10,000, then you wouldn't apply your state income tax towards that. And then your refund wouldn't be counted.